Welcome to the Forged in Fire podcast. Meet your host, Nate Farmer Eden, co-founder and CEO of Eden Capital, dedicated to achieving financial independence for his community, and Cole Farrell, founder and CEO of Vulcan Capital, a real estate expert with a passion for empowering others through education. Stay tuned for another episode right here on Forged in Fire.
Welcome back, everybody, to another exciting episode of Forged in Fire. I'm your co-host, Nate Farmer Eden. Allow me to introduce my counterpart, Cole. Come on stage, brother.
Nate, what's going on?
How are we doing, brother? It is a nice day here. Things are going smoothly, dude. But I think we got something pretty cool going on this evening, don't we?
We do. We got something in the works. So if anybody's listening to this, they're not going to be joining on this evening, but they can join on in the future. But we have an event. We have a big webinar, and it's all focused on getting into real estate. So specifically how to find that first deal, why real estate is so impactful, why it's the most effective way to reach financial freedom. But it's going to be an awesome time tonight. So please click the link in the bio or below, and you'll get all the info for the next one coming up. And there's no hurricane outside, Nate. Did you notice that?
I did. And we're still standing. Oh, my goodness. Here we are.
We are. All right, so let's jump in here. Before we do, though, a couple housekeeping items. First, please leave us a rating and review so that we can continue to grow and educate others. Second, please subscribe so that you don't miss another episode, right? And lastly, buckle up. It's going to be a hell of a ride as always.
Oh, dude, it's going to be so crazy. All right, so before we introduce our amazing guest and dear friend of ours, Cole and myself also just want to express all of our deepest sympathies to everybody that was affected by Hurricane Helene. We invest in the Carolinas, so we understand a lot of the devastation, a lot of the stuff that's going on out there. Our support, our hearts go out to those that are out there. Please feel free to reach out to us if we can help in any way. Now, moving forward, and let's getting back into it for Forged in Fire. We have an amazing guest today, Domingo, and I can't speak enough great things about him. So this guy, Domingo, come on stage. Used to work for Google. After that, decided to become an entrepreneur. This guy has syndicated 2 deals on his own, crushed them, nailed them. And now he wanted to sort of streamline a process after going through some of the trials and tribulations and frustrations and headache of trying to syndicate deals. I wanted to streamline the process, and currently he has, I believe it's somewhere around 25 AUM or assets under management. Domingo, how you doing, brother? Welcome on stage.
Thanks so much for having me. Really excited to be here.
Dude, the pleasure is all ours, man. So please, dive into it, man. So what got you here? What brought you here? Tell us a little bit about yourself and where you're at today.
Yeah, absolutely. So share my story. I'm originally from South Texas, born to immigrant parents who came from Mexico. For them, real estate was a really big path to financial freedom. They were dentists by day, real estate investors by night. So I grew up going to open houses as a kid. Really lived and breathed that entire development experience. Ended up going to Penn, studied finance and real estate there. Post graduation, I was at Google, was there for 5 years, where I did product strategy for the majority of my time there, and then quit around 2 years ago to launch the first iteration of my company, Homebase. And we initially launched as a platform to let people invest in fractional real estate for as little as $100. We effectively took really small minimum check sizes, very different than traditional syndications. Successfully sold 2 properties that way. Our very first home sale went viral. So if you look up Homebase, Texas House, Solana, one of the very first searches that appears, helped us build an investor base of about 3,000 plus accredited and non-accredited investors. Ultimately, we saw firsthand what it takes to syndicate, from fundraising to investor management, accounting, compliance. So much time and effort goes into that. And so then we pivoted our business, and now we're truly a software business. We partner now with syndicators and operators and help them manage their entire back-end stack. All the things that we dealt with and experienced ourselves when we were syndicating deals. So yeah, it's a bit about me.
I love that. There's so many things I want to dive into there. So specifically, let's dial it back, right? So you were at Google, and then you ended up getting into the real estate world. So I want to go into why, right? Is it a classic story? And then why syndicate? Why go the route that you did?
Yeah. So For me, it was always crazy to think that it was harder for me to be a homeowner than it was for my parents. And they came to this country literally nothing. I was like at a top tech company making good money, but living in San Francisco where real estate's like crazy expensive. And it's like I'm literally never going to afford to buy a house. And so the whole original thesis for Homebase was, can we give people the opportunity to actually start investing in real estate? And a lot of traditional syndications will have like 25K, 50K. Some people have 100K minimums. And so our thesis was, we think there's a lot of people out there that would love to invest, but can't because they don't meet that threshold. Can we let people invest as little as $100? And so that was the entire premise of the company. We found deals in South Texas that were small enough that we could actually support that. Of course, you do always have anchor investors that take up the majority of the round, but we were able to get a lot of first-time real estate investors. And that was something I was incredibly proud of. We had so many first-time real estate investors that were putting like $100, $500, $1,000 that had never, ever owned. And so like that was really why I got into it. And I always knew I wanted to be an entrepreneur. And so that was really like my parents did a lot of investing. I got to see a lot of that as a kid. And so I always knew I wanted to be in the real estate space as well. So yeah, ended up quitting around like 2.5 years ago and been part of the journey ever since.
That's amazing.
I love that. Now, going off script, that's what we do best here. So I've got to know also, thinking about wanting to buy a single family home, was that also what you wanted to invest in then too? Or did you want to go multifamily or how did that transition sort of happen?
Yeah, so we syndicated single family properties. So we did like one house that was about 165,000 and another one that was about 260,000. So definitely much smaller than traditional syndications are, but it also makes sense because our check sizes were so small. And then if you're also like regulation B or Reg D 506B only lets you have 35 non-accredited investors. So you are capped at the amount of people that can participate in per deal. So with all these restrictions, we focus on single family. And the idea was, can we create a more liquid economy for single family? And so we wanted to have like secondary trading of these assets happen. Didn't realize that to the full extent because we ended up pivoting the business, but we still let a lot of people invest, like sold to properties. And, yeah.
That's awesome. So wait, I have a question follow up on that. So we do the traditional syndicating route, right? We're buying properties now. We do 506B, et cetera, et cetera. So we deal with that 35 non-accredited investors. How did you get around that? Like, what's the rules that you guys run under that allowed you to do it?
Yeah, so still following the exact same rules. So like you can have up to 35 non-accredited, but then you can have more accredited investors. Luckily, we had anchor investors that were accredited that took up like the majority of the investment. People putting in 10, 50K, and you don't need that many of those to hit like the 165K amount. And these are all equity deals. And so the 35 non-accredited slots though were for like people typically putting 100, 500, 1,000. And so it was really like each of our investments had around like 40 to 50 investors because the majority of were small. And then we had a handful that took big checks.
Makes sense.
I've got so many questions. Okay, but let me just ask you this one. So talk about some of your struggles and maybe the team struggles on how you were able to sort of put this all together, especially from syndicating the very first deal. And then also, here's a two-part question. Why syndicate? When other investors might just say, let's just grab an FHA loan, or let's just go this route and figure out about PML or maybe OPM. Like, why syndicate single family that way?
Yeah, so I'd say in terms of the struggles, like we were effectively building a crowdfunding platform. So have you ever seen companies like CrowdStreet or like Arrived Homes? We were effectively building one of those platforms. And so in terms of struggles, like building a crowdfunding platform is incredibly difficult. Not only do you need to find supply, but you need to find demand, and they need to happen in tandem, or one can't really overpower the other. And so for the first deal, it was very much like we found friends and family and extended networks, very similar to what traditional syndication is too. A lot of times you're calling like your friends saying, hey, do you want to invest? But then the second deal was actually because like mostly strangers. And that was because our very first deal ended up going viral. So you can't do any sort of general solicitation when you're doing 506Bs. So that was also very challenging to have to work around. We got very lucky in that after our first deal closed, for those not familiar, we were using crypto as like our technology stack for how we were actually fractionalizing these properties. And so like that ended up going viral itself just because it was like one of the first that we did it. And so then like that then led to a ton of people globally signing up on our platform. Like to this day, we still have like 5 people signing up daily on our original website. And like that, includes a lot of people in the US. So then when we then had our second property, it was really just about reaching out to those folks in the list, had a lot of calls with folks, and then people invested. And we used to do something that's not at all scalable. But when people signed up, we would actually do 30-minute interview calls with every single individual that signed up because we wanted to know who our customers were. And so that was also our way of like creating, a touch point with people. So they weren't actually strangers. That was us understanding that these are actually qualified investors, even though they're not accredited.
Love that. And it's nice to hear, the challenges that you guys went through is the same kind of thing that we go through. And it's nice to hear, okay, it's other people are going through this stuff. And it's interesting just to hear a different perspective, a different strategy. So I absolutely love that. And, specifically that you're targeting people that want to build wealth, they want to get in and they can't, right? Because like you said, these 25, 50,000 minimums, that's a lot of money. And sometimes that's everything somebody has and they can't risk it because investing is risky, right? So I think that's, super noble. And I love that. My question is, when you did this, when you were buying the singles or whatever it was, are you getting mortgages on these? Are you buying them cash? I'm assuming cash based on what you're saying, but how does that run?
Yeah, all equity deals. No bank really wanted to give a mortgage with their 16 investors in like an $165,000 house.
Yep.
So yeah, they were all equity deals. That's more for like larger multifamily and they're used to those structures.
Love that. Love that.
So then a follow-up to that one then, can you walk me through maybe your first or your second deal? Like what it looked like on the acquisition side, and then once everything happened, and were they value add? So was there any component when it came to being able to get things stabilized? I don't know if that's a thing. And then what does the exit or disposition look like as well?
Yeah, so to walk you through the end to end. So the very first property, like truly was a big experiment. And so it was actually one of my parents' properties. And so we sold 20% of it. And so the thesis there was, are people even interested in something like this? And so we basically fractionalized it. My parents kept 80% of it. We sold the other 20% online. And like that's where people came in, and going back to like, we were using crypto to do it. So there was like a bit of friction in that process as well. And so people were trying to figure out like how they could even buy it. But we successfully sold that out. Then that ended up going viral. Then the second one, that was truly like, we went through the entire flow that a typical syndicator does. Looks at a ton of deals in South Texas, found a few we liked, put in bids. One of them was accepted. We went through the entire like inspection process, like truly to make sure it was a good property. And then we crowdfunded the entire amount that we needed to actually purchase the asset. And so we had like a 35-day window in which to crowdfund like 165,000 completely, which was incredibly stressful, especially when it's like people you don't know on the internet and you're like reaching out to your lead list. Especially when you're taking small checks too, you're having like dozens of calls. And so that ended up like, we closed that. And that was a value add. So like that property was quite run down. Luckily we had boots in the ground. We were able to fix it. Now like going to exit, we held both of these properties for about a year. There's about like, one of them had about a 10% appreciation. The other one about a 15% over a year time horizon, which is pretty good. And we're going to sell them. It's not going to be like, the typical 5 to 7 year hold, but like for our business is a bit of a distraction because it's like, that's not what we do. We're now a software business, but like, I think every investor is going to be quite happy with the outcome of what we hit. So feeling quite good about like where things ended up. And it was truly just 2 big experiments that we ran and learned a lot along the process.
That's awesome. And that's what it's about, right? So I have another question, but I want to get to this first. So one of the things that we ran into, and I'm curious if you dealt with this, and it's kind of a spicy question, but we always found that a lot of times the lower dollar amount investment or investors usually created a lot more of the work. So versus we have people come in for hundreds of thousands, and usually they call us, go, yep, deal looks good, send the money. And a lot of times we have people that were thinking about coming in for 10 or 15,000, and we had 75 calls with them. And that's fine. I'm not saying there's anything wrong with that, but I'm curious, in your experience dealing with people that were investing $100, $500, was it the same kind of trajectory, or what was your experience like with that?
Yeah. So I'd say getting people to the stage where they feel comfortable investing with you, you always do need to build that trust. And so it was a matter of like, given we're not taking that big of check sizes, people definitely have a lot of questions. But when it comes to like, I'm just giving you 100, I'm giving you 500, it is a lot for some people, but it's not so much to the point of like, I need to have like 10 calls with you before I feel comfortable. And we tried making our platform as self-service as possible, which we've actually translated into like the software that we now build to support other people. We come from building consumer products, so we understand like what beautiful flows look like for both the investor side, but also the sponsor side. And so we try to make that experience as seamless as possible so that the investor, aka like these 3,000 plus people making accounts and looking at these deals, feel very comfortable that we're going to be good stewards of their money. And so in terms of just like the smaller check sizes, I'd say in general, yes, those people tended to be higher maintenance. But we typically, like, because we had way too many people for the 35 number of slots that we had, we ended up being able to be a bit choosy of like, okay, we're actually going to take this person's capital, not this person, just based on like, they seem to be lower maintenance.
Sure.
I love that. Oh my goodness. So tell me a little bit more about how you find these properties. What markets are you diving into? Are you interested in working outside of the state that you currently reside in? How does that go? And then if you decide that you're going outside of the states, what does it look like for boots on the ground and partnerships?
Yeah, so this is like back when we were syndicating deals ourselves, everything was in South Texas. So specifically McAllen. It's like the most southern area of Texas you can go to before hitting Mexico. That was where all our properties were located. I'd say moving forward, now we're supporting operators with their software back office solution. And so we do support people all across the country. So now we're not doing deals, but we do, support people all across the US with the deals that they're doing, irrespective of geographies within the US. And on top of that, like we still have our investor base of 3,000 plus that signed up to invest in real estate. So we run a podcast, we have guests come on, and then we share those podcast episodes with that investor base. And so some of those people have then gone on to invest with some of these sponsors. So it's been really cool, like full cycle seeing like, even though we can't now like offer you deals to invest in, there's folks in our network that do have good deals. Now we can introduce you and connect them.
That's awesome. I love that. So you touched on this a little bit, but I'm curious, and this is a two-part question. So one, what do you see coming in the next couple of years, right? You're in this space, you see a lot what's going on. Where do you see coming? And two, related but not, what are specific things that you're tracking in your business? Like what are your KPIs that you focus on to see if you're successful now and in the future?
Yeah. So in terms to the first part of the question of like, where do I see the business going? I'll think about it from like the software side, but also the real estate side too. Like with interest rates coming down, but yet like mortgage rates going up, I'd say like there's a bit of confusion right now in the market. I'd say things have been relatively slow the last 2 years in terms of deals being done, but I think people are pretty excited going into 2025 that there's going to be a lot more deal flow happening and sellers finally coming down on price point and feeling more comfortable, where numbers are penciling out better, at least based on a lot of conversations I've had with different sponsors. On the software side, I do think like with the rise of AI and how quickly now solutions can be built, I do think software in general is going to be commoditized. And so what I think is going to happen with that is I think prices are going to come down for a lot of solutions, and it's going to come down a lot to distribution. So a big piece of why we even started building Homebase and launched it was we looked at a lot of solutions in market, thought they were incredibly expensive for what they were offering. And it was like, can we build something that not only looks beautiful, we know exactly what we're building because we've done it, but can we make it affordable for folks regardless of how large they are or how small they are? And so we've actually gotten folks to sign up from different platforms just because they've really liked our experience. They like the price point, makes sense. So like, I think we're going to continuously go down that route. And the way software companies monetize is going to drastically change over the next like 5 years because of this. In terms of KPIs that I'm personally measuring, so to me, it's about number of sponsors that we're supporting. That's a really big one. Another one is, of course, like revenue coming in. But the last one is like assets under management. We don't charge tied to assets under management. It's just something that we track. Ideally, when we get to like $1 billion plus, I would love to launch a REIT internally within Homebase. And I think that REIT would invest in some of the top performing syndication funds that we're supporting, and we get access to a lot of this data. The purpose of that being, like I'd love to be able to give investors and syndications a lot more liquidity on their investments, because typically it's like a 5 to 10 year hold. There's very little liquidity in that time frame outside of distributions. And so if you have a REIT that invests in all these different funds, now as an investor, I can sell into that REIT, get money faster. And then, people that invest in the REIT get access to all these deals that they normally would not get access to, and at a much smaller price point. So it's truly a win-win from every regard. So
I love that. And you have complete control in a way of, you kind of manage the database. Like you said, you're getting the data, then you're able to kind of take the investors and the sponsors and group all this together in a REIT and kind of control the exit as well in some fashion. So I think that's genius. I absolutely love that. Nate, do you have any last minute questions before we jump into our hot seat?
Oh my goodness. No, I think Domingo is ready for it. I think it's time for the fire round.
Domingo, on a scale of 1 to 10, how ready are you?
7.
7? All right.
He said 17.
I love it. So, all right, here's what we're going to do. We're going to ask you a couple quick questions. You can answer very succinctly. You can elaborate, but Nate and I are not going to respond unless it's extremely good. All right, here we go. What separates top performing investors or entrepreneurs from the rest of the crowd?
So in terms of investors, I'd say just level of due diligence that you're doing. Like, you can truly understand when people are good at it when they talk about the nitty-gritties of how they check out properties, of how they're underwriting. On the entrepreneurship side, I'd say it really comes down to how well you understand the market that you're going after and the customer, and then how much you're willing to grind to actually achieve the dream that you're going after.
I love it. What's a daily habit that's contributed to your success?
I love to read the news. I probably spend a bit too much time on Twitter, but I'd say understanding where technological trends are going and trying to stay on top of it. And a random shout out to a company like Cursor AI is basically a co-pilot that's come out in the last few months. Our engineering team has now adopted it. It's improved our productivity by about 30 to 50%. And that was all because I sent that to my CTO. I was like, have you used this? He's like, no. All right, let me look into it. And now we've already adopted it. So
awesome. What is a piece of advice that you would give to yourself if you were starting again?
Yeah, I'd say just get started sooner with some of the big risks you want to take in life. It took me probably 6 months to fully quit Google, but I knew 6 months ahead of time that I wanted to quit, to the point that my mom was like, just quit already. You've been talking about this for so long, just do it. And so I'd say a lot of times, people put so much time and effort, you get into analysis paralysis. Just do it. You learn a lot throughout the process, and then that makes you so much smarter, better for the next time you're doing it.
What's your favorite business book?
Yeah, favorite business book. I'd say How to Make Friends and Influence People is a really, really good book. Once you realize that people love to talk about themselves, you actually change the way you do conversations. I'd say a lot of times, when I was younger, someone would be talking to me, I would start thinking about my answer to their whatever they're saying in my head, and you stop listening to what they're saying. In reality, you should be only listening to what they're saying and then making a few comments, and then both parties come away saying wow, that was an amazing conversation. I love talking to this person.
Great book, classic for sure. What is your favorite part of owning your business?
I'd say knowing that the upside is truly unlimited. Once you get customers coming in and you start people say I love what you're building, or here's feedback, knowing that you can continuously just keep getting more and more customers and growing that out, and truly seeing the efforts of your work get to an outcome is incredibly rewarding.
What's one of the new systems or products that you've implemented into your business to help drive your success?
Yeah, so I mentioned them earlier. I'll mention it again. Cursor AI is incredible. I think so much software is about to be commoditized. So it's going to come down to what tools that you use and how efficient and fast are you at building.
Love it. You survived.
Wasn't that bad, was it?
No, it wasn't too bad. Great questions.
I knew he was at a 17.
Love it, love it. Well, Domingo, look, thank you so much for coming on here. I mean, it's really cool to hear your story of starting out, going to school, ending up at Google, taking the leap and quitting and going into real estate, and then transitioning into software. And it's nice to hear kind of the difficulties you heard in syndication, and being able to create something that revolutionizes that, I think is just absolutely incredible, and something that Nate and I will definitely be watching. Because like you said, as we do this ourselves, we can understand those struggles and things like that. And it's awesome to hear that your success and you're clearly building it. So we're definitely going to have to loop back and have you in again in a few months or a year as your business grows, and just have the same conversation. So excited for that. I have two final questions for you. One, where can people find you? And two, any final advice?
Yeah, so you can find me on LinkedIn or Twitter. And I can follow up with like the links to both of those. So maybe we include them in the show notes.
Yeah,
or you could go to our website, homebasecre.com, would be the best place to find me. And sorry, what's the second part of the question?
And any final advice?
Yeah, final advice. So this is catered to like entrepreneurs, very much like the grind can feel very overwhelming sometimes. You have to make a lot of sacrifices in like your personal life, in your professional life occasionally. I'd say like not losing track of family members and like people that you love and care about as you're like trying to pursue your dreams is key. I've spoken with so many entrepreneurs that, have had a relationship end, or like truly have lost people that they care a lot about, and that it's heavily affected them, even as their business is doing really, really well. And so that's something that I always try to ground myself and my team on, of like, partners are always first, and then comes the business. So that's typically my advice.
I love that. I love that.
Amazing. Awesome. Well, Domingo, it has been an honor and a pleasure having you on with us. This has been phenomenal. I echo all of Cole's sentiments. We cannot wait to have you back on in the next couple of months or within the next year to be able to tell us all the cool, innovative ways that you've been able to streamline your new company and how the business is growing, and all the new amazing assets that you got under management, or how you've helped different syndicators. It's going to be awesome. I cannot wait. So thank you. Thank you. For everybody that's listening, thank you so much for joining us for another episode of Forge and Fire. It's been an honor, a pleasure, and a privilege having you here listening. You could be anywhere else in the world, but you decided to be here with us today. Thank you so much. Please get home safely, take care, and we'll see you again soon on the next episode of Forge and Fire. Take care, everybody.
Thanks, guys.
Thank you.